Hello, chart watchers and Decision Point faithful. Welcome to this Monday, December 13th, 2021 episode of Decision Point. My name is Erin Swenlin from DecisionPoint.com, and I am here with my father, Carl Swenlin. It's our job to prepare you for the week, and we'll see what kind of trading activity we have in store for us. We were talking a little bit before the show. I don't know, it doesn't look too exciting to me, but I don't know. You were saying you're thinking it's going to be an exciting week.
I think it could be. We got the Fed meeting tomorrow, and then, of course, the announcement on Wednesday. And they're expecting some tightening. And if it's more than expected, it could be, bad. And if you remember, the day after Thanksgiving, we had we normally expect that to be very quiet, but it wasn't. It was a high day and very volatile. And so I think we should be prepared for something like that, possibly.
Mm-hmm. Yeah. So yes, for me, I'm looking at upside, and that doesn't look like that's going to happen. So that's why, to me, it's going to be kind of a sort of week. But yes, volatility could kick in here, so we'll have to see. Let's go ahead and we'll go through the agenda, and then I'm going to have you do the SPY and indicator overview. We're going to look at the Nasdaq under the hood. We have indicators that I like to call under the hood for our sectors, and we spend a lot of time with our Golden Cross and Silver Cross on the SPY, but we don't look necessarily under the hood at some of these indexes. And so we'll take a quick peek as to what's going on there. I looked at it in the trading room data, and boy, I didn't realize the participation was really so low for the Nasdaq, but we'll talk more about that soon.
Right.
Sector CandleGlance, that's my new thing. I did write a Chart Watchers article on my Sector CandleGlance and how you can use that. So if you just go to the last Chart Watchers articles in the StockCharts on their articles page, just go to the Chart Watchers blog and you'll see that. We will be looking at an Industry Group CandleGlance, and I think I've kind of brushed on this in our shows before, but I find that I'm using it a lot more for Decision Point diamonds and also in the trading room. So I'll give you a little bit of a look at how I use an Industry Group CandleGlance. And then I will finish with our diamonds of the week. I have two for you going into this week that look pretty interesting, but we'll talk more about that later. So I'm going to pass it to you. We do have a holiday special that is going on. Buy 1 month of any of our subscriptions, and you will get 1 month for free. It's no coupon codes, just subscribe, and you will get that extra month. And that should be going on at least till December 24th, but we'll extend that to the end of December. We'll just have to see. And then I did mention my live trading rooms that I do on Mondays. These are free. So if you just go to our homepage, you can sign up for a free newsletter or click on the ad that looks almost exactly like this, and you can get direct registration through Zoom for those webinars. Our Decision Point sector scoreboard hasn't done much changing. We did have XLF move to a neutral signal with a dark cross. The 20-day EMA crossed below the 50. We did not go into a sell signal because sell signals are when the 50-day EMA is below the 200-day EMA when we get that dark cross. So at this point, both comm services, which continues to lag, and XLF is also turning a bit south right now. I looked at a couple of those regional banks in the trading room, and those charts are just not looking that good right now. All right, so I'm going to pass it to you, Dad, and let's see what's going on with our indicators.
Okie doke. First of all, I want to lead with Apple. It's very close to becoming a $3 trillion company. The magic number is 182.85. Looking for that. Didn't quite get there today, but it's close enough. Anyway, it's an interesting thing. Today, it was trading higher, and then traded and it closed lower. So that looks like a possible reversal in progress here. For the SPY, we actually hit a new closing high on Friday. Today, it's didn't quite make it to that high, and it's traded lower. We've got an expanded total volume, and the SPY volume is expanded, and the VIX is moving back to the 20-day moving average.
I would note before you flip the chart is that PMO, we now have another top below the signal line.
Thank you for catching that. Yes, that's not at all a good sign.
No.
We've got the high over here, and then again we made a new all-time closing high, but the PMO was much lower. So this is a negative divergent through here too.
Mm-hmm.
The advanced decline lines. The advanced decline volume is trending downward. That's not a great sign. Even with this making a new high here, it was a lower high. So negative divergence on that chart. New highs, they expanded today, but that was intraday, and I'm sure they didn't close at those highs today, most of them. I wanted to spend a little time on the Gold Cross index for the broad market indexes. We've got the Gold Cross index shows the percent of stocks with the 50 EMA above the 200 EMA. That is a long-term buy signal. So right now we've got about a quarter of the S&P 500 stocks are on death crosses, which is when the 50 goes below the 200. The Nasdaq, 43% on Golden Cross. This is horrible with the Nasdaq making all-time highs. And look at this, the amount of these stocks. These stocks that are on the death cross they're in bear markets. And the NYSE, not as bad as the Nasdaq, but it's at 66% Golden Crosses, and that's just, again, we've got new highs in price and internals dropping. The Silver Cross is an intermediate term indicator. It shows the percent of stocks with the 20 EMA above the 50 EMA, considered an intermediate term buy signal. The dark cross is when the 20 goes below the 50. And you'll notice here, the NASDAQ, 32% have a silver cross. That's over 75%. No, it's at 70, around 70% are on a dark cross. Then those stocks without the silver cross are considered to be in a correction. The New York Stock Exchange Composite, again, we have top below the signal line on that, and they're at 41% silver crosses. So these are just not. This is horrible internals. So that tells me that's one of the reasons I expect that this week and next week to maybe be not fun times. Okay, let's look at the Golden Cross for we've looked at the S&P 500. On the mid caps, we've got 72% on the Golden Cross. And for the small caps, 65%. Just horrible, really, just awful. And then
Certainly not anything to support higher prices right now.
no, still doesn't mean they can't go higher because the participation is narrowing and money is going into fewer stocks, that most likely the large cap stocks, and they are holding the major averages up. But with all, you can just see that the participation is just disappearing. Here with the Silver Cross Index for the mid caps, we're at 48% there and 47% on the Silver Cross. Climax assessment, I put this today. I'm considering that we're on a climax situation. These are the limits I've drawn on here. They are arbitrary, but I looked at, looking back at the history, and I just picked like 300, plus 300, and minus 300 for the net AD on the S&P 500. So on the net AD volume for SP, we've got slightly over the limit that I've chosen. But yeah, that's about 1,100, and we have an expanded total volume for SP 500, and we have here we have the up-down volume ratio is not quite at 3, but it's close enough. You might want to change your mind on this, or my mind on this, Erin, when you like the DPA today, but I'd say it's close enough to consider it, and I would consider it a downside initiation. We had an initiation here on Thursday and skipped a day. We had no follow through, so I'm going to consider this to be another initiation to the downside. Again, not very strong as we've been used to, but I consider it be stronger than what we had on Thursday.
Mm-hmm. Yeah, I agree with you.
Let me go back. Would you do the bias assessment? I'd like to see your reasoning on that.
Oh, okay. So we have the Silver Cross at 59%. It did have a positive crossover, so that's a positive, and it's rising. When we look at the percent of stocks above their 20 and 50, we note that those percentages are higher than the Silver Cross percentage. So there's still that opportunity that we could see a little bit of improvement in the short term, because with higher percentages, of course, that's going to bring price. If it's above the 20 and 50, that's going to bring those moving averages up toward price. So we could see a little bit more of an expansion on that Silver Cross. But, really, when I look at what's going on, that climax indicator, I look at this as a little bit more neutral, in my opinion, in the short and intermediate term, just based strictly on those percentages. The long term is a bit of a problem, though, as you pointed out. I mean, we continue to see those percentages moving lower, and then you have less S&P 500 stocks above their 200, which means that Golden Cross Index very well could continue lower, because there still are some more stocks there that now don't have their price above their 200-day EMA. So, I look at it, I don't know what you would say about it, but, those percentages, we did see, we don't have the readings on the 20 and 50-day EMAs yet. And I'm guessing that after a decline like we had, those numbers are going to go down for the stocks above their 20 and 50. So I would expect that Friday we had somewhat of a bullish bias going into the week, but I expect the participation numbers to move lower and more than likely give us a bearish bias in all 3 time frames.
Okay, I agree to that.
All right, excellent.
We had looked at the Golden Cross earlier, but this is zooming in. But you can see how it's just steadily dropping. Even when you have the green dotted line here, from that point, that's where the price is rising, and we would expect the internals to do the same. But on the Golden Cross, it just keeps dropping, keeps dropping. Here again, we have the green line, price going up, and the Golden Cross just dropping. Just a horrible.
Yeah, the foundation is
situation.
Definitely unsteady.
Okay, the short-term indicators, we've got the Swenlin trading oscillator for breadth and for volume, and they peaked, and that's a pretty good sign. We're going to show a short-term price losses. Now, you don't need to look at those anymore. Here's the intermediate term indicators. The ITBM, that's breadth momentum and volume momentum. And they have bottomed, and on an intermediate term, that would look pretty good. But you know what? Let me just zoom in here and see what happened today. I think they may have ticked downward. No, that was up, and that one was flat. So theoretically, they're still moving in a bullish direction there, and they're coming off the oversold levels.
Yeah, I'll be curious to see how many crossover buy signals we have today.
Yes. Bitcoin not doing well, broke this rising trend line, consolidated below it, and it looks like it's breaking downward again. Interest rates, the 10-year yield is not doing well. It's around the top here, and today it was down. We found support here, and perhaps we're going to find it again there. But right now, it's top. The PMO is top below the signal line. Yeah, I will. Why don't I just go there right now for the Treasury bonds? They were up 1.5% today, and obviously that's going to be across the yield range, and that explains why the 10-year was down today. As far as possibility of them going higher, of the bonds going higher, I'm having a hard time seeing that, considering that Fed's going to be tightening. The dollar, it's on a pennant formation here. We've got the flagpole and then the pennant. That's bullish. That's bullish, and the stochastics look bullish as well. Gold is still putzing along. I don't know when it's going to happen, but certainly someday people are going to realize that gold can't go to zero, whereas cyber currencies can.
Right.
There is something there. Oil, this is a bullish formation. It's a flagpole and pennant, we'll say, or a flag onto it. So potentially moving higher on oil. And then it looks like I better pass it back to you.
Oh, yes. Okay. Let's go to it. All right. So I promised the Nasdaq. So let's go ahead and we'll look at that. I need to get to my charts here. So I'm using the Golden and Silver Cross index we have this chart list available. So I was going to use this so we can get everything on the same page, and it really will give us a better idea on the bias. But those comparisons that Carl made are really important. You know, we really don't have that kind of participation. But look at this, and this was as of Friday. So I can only imagine how bad participation is now. So you can see at this point, back on Friday, our participation of stocks above their 20-day and above their 50-day EMA, barely 0.25%. So barely 25% of the Nasdaq has a price above their 20 and 50. I don't know about you, but typically when I buy a stock, I really want it to be above its 20 and above its 50-day EMA, if at all possible, or at least seeing those rise. But those percentages are so low. And when you compare it to the Silver Cross at 32%, we still can have that Silver Cross move even lower because we have lower percentages in participation. And again, this is from Friday. And I guarantee you that these numbers are going to look even worse after today. I mean, the one good thing is we start seeing this kind of deterioration and, you know, decimation really of some of the stocks out there. It does offer an opportunity when we do finally see the market turning back up. But right now, you know, while things look a little bit overbought, I have to say the Nasdaq just really is a problem for me. And I know a lot of people have started to follow the Nasdaq versus the S&P 500. So I would think they're pretty bearish and have been based on what's going on with the Nasdaq. All right, so I'm going to my sector candle glance so we can get just a feel for everything. And like I said, if you go to the articles page, you'll find an article I wrote about sectors and my sector candle glance. It's great because I can see everything on one page. And I have the PMO, the 20, 50, and 200-day EMAs as my candle glance chart style. So if you want to have your candle glance look exactly like mine, if you go to that Chart Watchers article at the very bottom, there is a link that will get you to a chart that looks just like this. And if you save that chart style of that chart as candle glance, you will now forever have, well, not forever until you change it, you will have the DP version of the candle glance. So when you look at this, there are a few things that really are interesting to me. As of Friday, when I wrote that article, every single sector had PMOs rising. But you can see XLI, we've got now a top below the signal line. We have a top below the signal line on financials. Consumer discretionary, which has been a problem after topping in November, is just, the momentum is still being lost there. And if we go to XLC, what's interesting is this is really the beatdown group, but I can't tell exactly right there. So let me just take a quick peek. Yeah, the PMO is actually still rising on XLC. So as not good as that sector has been, you can see with the price well below the 20 and 50-day EMAs. You know, it doesn't look good. It's not that I think it's going to move higher. It's just that amazingly, it still has rising momentum when we can see financials and XLI back here. XLK was my sector to watch going into this week, but honestly, and I talked about it also in the DP Diamonds, is that, you know, if the market was going to make a turn and go south, XLP really had a great chart set up as another sector to watch. And we do see great breakout on Friday, continuation. This is a very defensive sector of the market. XLRE, also a defensive sector with a beautiful breakout to new all-time highs. XLV is really coming back to life, particularly in the pharmas. Medical supplies, I believe, was the other one that was on my list coming into this week. So those really are the main sectors that look pretty good. And utilities, I don't want to forget that. It made new all-time highs. XLU did. So we're looking at the defensive sectors that are showing the leadership roles. So if we come back here, look at what sectors were leading today. All four of these are considered defensive areas of the market, whereas technology and discretionary, which really did not have a good day, they're in that more aggressive category. So it looks like we really need to start shifting our views toward those defensive areas. So I also said I would show you how I use an industry group CandleGlance. And if you come out to your StockCharts homepage and you set it up so that you get a tile that is Scooter Reports, then you get a choice of the different ways that you can view this. And so I put in the US industries, and it's really nice because you have the links right here to an RRG and a CandleGlance. So I just pull up that CandleGlance, and it shows me really those sectors that were outperforming today. And it also gives me an idea of where the momentum is and where it is not. And you can see aluminum is still in this trading range. So even though it hit that top 10 as far as the Scooter reports, we do have a positive crossover here on the industrial suppliers, and it's forming a flag. So that looks like an interesting sector right now. I pointed out home builders 2 weeks ago to my Diamond subscribers on this big breakout move, and they have just continued to be very good, but we did get a big pullback today. And look at this one that looks very bullish. In food retailers, wholesalers, so this is in that defensive area of the market, and you can see the relative performance really starting to pick up here for that particular industry group. All right, that leaves me 1 minute to show you my diamonds of the week. And here is the first one, and this is in that medical equipment space. This one I think looks great. You have an RSI that just is moving positive, nice bounce off of the 200-day EMA. I'd certainly like to have seen it close above that 50-day EMA, but it is holding on to that 20. We also see a 5-day EMA cross over the 20-day EMA cross moving average. Look at brand new buy signal on the PMO. Stochastics have just hit positive territory, and the group is starting to outperform. And Agilent, that's what it is. Yeah, Agilent tends to travel and perform about as well as its industry group. So as long as that industry group is moving higher, we should be able to expect Agilent to continue higher. And then my other one is in that consumer staples area, and that is Kraft Heinz. This is a little bit of an early one. I don't generally get into or present some that are in this early in their range, but I just couldn't resist this double bottom formation that it's getting ready to confirm. And that's all we've got today, so happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.